Olá, boa noite, tudo bem? Estamos aqui hoje num evento em parceria com a Kamino. Eu sou o Gustavo, cofundador e CRO do Distrito. É super importante falar aqui, já nessa abertura, que o Distrito investiu também na Kamino. A gente tem uma parceria grande aí, estratégica, justamente para ajudar, né, startups e empreendedores em uma das principais dores que eles têm, que é a gestão financeira, principalmente no começo, né? Então, quando começa errado, é muito mais difícil de corrigir do que quando já começa certo. E é daí que nasce a parceria aí também, então, do Distrito com a Kamino. E eu queria chamar aqui para o nosso palco virtual, né, para a gente poder começar a nossa agenda aqui, o Arthur, né, da Bambu, e o Ben, da Kamino. E aí, senhores, como é
Olá,
que vocês estão?
tudo bem? Tudo bem, obrigado pelo convite.
Boa, excelente. Gente, eu vou fazer aqui uma pequena introdução, tá? E depois a gente vai passar a discussão aqui para o Ben e para o Arthur, tá? Para aprofundarem mais nesses temas. Então, a gente aqui no Distrito, né, é uma plataforma de inovação que conecta empreendedores, né, quem está criando startups, quem está criando produtos e serviços através da tecnologia, com investidores e também com corporações, com empresas que muitas vezes têm nessas tecnologias a solução para os seus problemas. E hoje, né, o Distrito é uma das maiores comunidades de startups e empreendedorismo do país. A gente tem aqui mais de 700 startups na comunidade que estão aqui para justamente se capacitar, aprender, né, a não cometer os erros que outras startups, que outros empreendedores já cometeram, e ter uma chance de sucesso maior, se conectando também com o investidor correto, com a corporação, com o cliente correto, enfim. Então, o Distrito, ele como uma comunidade de startups, ajuda o empreendedor desde o momento que ele tem ali uma ideia na cabeça, né, e precisa dos primeiros passos, muita mentoria ali no começo, para de fato tirar do papel essa startup, até scale-ups, startups mais maduras, que já tem outro tipo de desafio, né? A startup mais madura, ela precisa de menos capacitação, menos mentoria, e ela já tem ali um interesse maior em, de fato, crescer, em ter acesso a capital, ter acesso a clientes. Então, hoje, essa comunidade aí com mais de 700 startups e 14 mil pessoas, né, faz parte aqui do Distrito. E o Ben e o Arthur, né, pediram para eu vir aqui trazer essa leitura, né? Porque a gente trabalha muito com startup early stage, e quais são os principais desafios de uma startup early stage em relação a serviços financeiros. E isso é super importante, porque a gente vê empreendedores com produtos incríveis, né? Às vezes você tem um empreendedor que tem um perfil mais técnico de CTO, de desenvolvimento, ou um empreendedor que tem um perfil comercial muito agressivo e que consegue, né, vender bem, mas acaba tendo uma gestão financeira mais, enfim, não profissional, e isso acarreta muitos problemas, né? A startup acaba deixando de crescer por problemas financeiros. Então, hoje, por exemplo, um dos principais problemas que a gente vê em startups early stage é pricing, que é a startup vendendo o preço errado, ou seja, o empreendedor ele não conseguir calcular, né, um preço adequado para o seu produto que vai te gerar ali uma saúde financeira. Uma outra dor, né, que a gente tem muito forte é a startup não conseguir gerar os relatórios ou seus statements financeiros, né, na frequência. E aqui eu já emendo com outro, que é a disciplina. Porque muitas vezes o que a gente encontra no empreendedor early stage é que ele começa a fazer ali um controle financeiro, mas ele perde a disciplina nesse processo. E quando você não tem a disciplina financeira, isso começa a gerar problemas, né? Inclusive, já emendando aqui num terceiro, que também é importante, que é justamente você não prestar atenção, né, nos pequenos gastos. Então, quando o empreendedor vai ver, ele tem tantos pequenos gastos, né, várias torneirinhas, que estão fazendo com que a margem dele diminua e ele não tem ali a consciência disso, tá? Um outro ponto aqui super importante é ferramenta de cobrança, tá? Então, assim, a gente vê que os empreendedores também, no começo de uma jornada financeira, não se preocupam com isso, né? Então, acabam tendo depois problemas de inadimplência de clientes, enfim, não tem ali um processo, normalmente o empreendedor não tem um processo de cobrança, tá? E por último aqui também a questão de misturar PF e PJ, muitas vezes porque a startup não tem uma conta corrente, né? A startup não tem um cartão corporativo, e aí o empreendedor começa a colocar, né? Coloca lá o Heroku, né? Ou o servidor ali da Amazon ou da Microsoft no cartão pessoa física dele, enfim, e aquilo é um precedente para várias outras ferramentas e gastos começarem a se misturar entre pessoa física e pessoa jurídica, né? E aí fica muito mais difícil de você ter um controle financeiro, e você não tendo um controle financeiro, você diminui muito a tua chance de conseguir levantar um primeiro cheque, por exemplo, de investimento com capital profissional, né? Com investidores que vão exigir de você essa disciplina, tá? Então, dentro desse frame aqui, né, desse background, de muito sofrimento dos empreendedores aqui nos early days, em relação a serviços financeiros, eu queria então chamar aqui de volta, né, Ben e Arthur, para discutir um pouco, né, como que vocês estão vendo isso e que dicas e soluções vocês também dariam aí para os empreendedores que estão assistindo a gente.
Legal. Obrigado pela intro e também pela parceria, né? Então, só pessoal, agora vamos mudar para inglês. Eu sei que, pela coincidência de eu e Arthur sermos dos Estados Unidos, a gente mora aqui nós dois há muito tempo, a gente fala um pouco disso. Mas também eu sei que tem empreendedores assim, de todo mundo que estão vindo para o Brasil agora, então vamos tocar essa próxima parte em inglês. So just a quick intro of myself, and then I'll pass it over to Arthur. But basically, as I said, originally from the US, I worked in corporate finance out of school, did an MBA at Wharton, and then came down to São Paulo in 2007 with McKinsey. Worked a couple of years at McKinsey, focused again on corporate finance, went to run Groupon down here, and actually became the CFO and had always worked in corporate finance, so that would be no problem, and discovered that there's a lot more to running a finance operation than corporate finance. There's probably about 90% is different and much more related to operations. I think that was a kind of a first wake-up call, which we'll get into a little bit more. And then after Groupon's IPO, I left to found Gleason. So I was together with Thiago running Gleason for almost the past 10 years until 1 year ago when we sold to PicPay. And now I'm founder of Kamino. And through the entire journey, going through very many of the kind of pains that we're trying to solve for entrepreneurs, for fast-growing companies, with the financial hub that we're creating at Kamino. We'll also get a little bit more into that, but that's just to kick off a little bit of kind of what we're building and why we're building it, and kind of what I've gone through on the finance side. And let me now pass it over to Arthur to give us a little bit of his background as well.
Thanks, Ben. I'm a computer engineer, and I served 5 years in the U.S. military. I was a submarine officer. That got me into business school. I went to HBS. And then after that, I took a career on Wall Street and worked in finance, in sales and trading and capital markets for a number of years. That eventually drew me to Brazil in conjunction with getting married. And I worked actually in Brazil in capital markets as well for a number of years before taking the decision to move to the other side of the table and invest money, or take investment instead of keep investing money. These last 10 years, I worked at Movely, where I helped build iFood, Simpla, Wavy, Play Kids, and Zoop, and a number of other investments. When I kind of add up what I've been doing in this last 10 years, I realized that I've been very involved in platforms, and it's something that I'm pretty passionate about. I decided to leave Movely about a year ago and start a capital markets platform that helps fintechs and other companies raise debt financing, and that's Bamboo. So that's where I work today. My experiences are heavily involved in mergers and acquisitions. At Movely, we did around 40 mergers and acquisitions. We raised and deployed around $1 billion. And Today, in addition to Bamboo, I'm very actively involved in the ecosystem. We're investors in Kamino as well, proud to support the ecosystem through them. And then I'm also very actively involved in the nonprofit endeavor, where I'm a mentor and most recently an ambassador there as well. So it's a pleasure to share experiences of nearly a decade in tech finance as a CFO. I was CFO at Mobley for around 6 years before moving to be chief strategy officer, and as an investor, where I see from the other side today how interaction with CFOs is.
Awesome. And so I think, what we'll get, if we kind of think about dividing this into two parts a little bit, first talking about what very early founders should be thinking about on the finance side, and then, working our way up as startups are growing and they need to start scaling and kind of making their organizations a little bit more professional. I think that's, even I mentioned kind of the shock that I went through going from corporate finance into being a CFO of already, very fast growing startup which didn't have the systems in place and was kind of flying, and trying to build the plane at the same time. But having gone through that, I also had a sense of, okay, now I've really got the full picture. And then, I went to found, first Gleason. It was, back in the day, 10 years ago, like spending 20 hours at the cartorio and a lot, trying to beg a big bank to open a bank account for us. So it was, even kind of farther removed from finance operations. It was just, how do I even get this thing, up and running? And I think when we, especially at Kamino, as we're talking to founders and recommending to founders, we talk a lot about, the importance of having the right structure and understanding, how you create the, your corporate structure, whether you're based in Brazil or if you're already looking to capture funds outside and getting the right offshore structure set up. And also the challenge of, getting bank accounts open. We've had, a number of customers that struggle to get their bank accounts open in Brazil, being, with a startup and not having any financial history, and also in the US. So those are things that we're supporting companies on. And then I think the other piece that we see a lot is because people don't have credit card limits, which are, sufficient, or because the credit cards simply, deny all of the SaaS payments and then cross-border payments and things. Many founders end up using personal credit cards. So, this, as Gustavo mentioned, kind of mixing the company finances with personal finances in some cases because people don't realize, but some cases because that's the only way. And that was certainly the case of Gleason for many, many years. We had to run a lot of expenses through our personal credit cards because simply it didn't work in the Gleason bank accounts and credit cards. So that's one thing that we're looking a lot, at how do we remove some of the frictions, I think, with from the systemic side. But I'd love, Arthur, you're going through this now, with Bamboo and everything. How was that kind of that starting point? You had all this experience in finance before, but then you had to like go back to day zero and try to just get your operations running and your payments working.
Yeah. I mean, even today, I think we're still working through that, as a lot of what we're doing is building an investment bank, and so there's a regulated side and applying. I'd forgotten just how much time is tied up in legal and how helpful it is to have an advisor or a group that kind of can understand your business and either help directly, in the case of you guys, with starting up bank accounts and providing credit cards, or provide introductions to good professionals who can give more detailed advice. And that's something I think that's underappreciated, of how oftentimes you feel alone as a founder, and you struggle to figure out who to get help and to get heard, because initially you're a very small account. And services like Kamino and organizations like Endeavor, for example, to broaden a little bit, are helpful in making those presentations to get you specific advice as well, when needed. But today, I'm proud that we operate finance with one person. And so that's only possible if you have tools like what you're talking about.
Yeah, and I think another thing that we see, and to your point about talking to others, is it really helps if someone else has gone down the path, can help you with a curated list of, these are the people that you should be working with. And I know that, back in the day, also is much less about like, oh, this bank is great, or this law firm is great, because that wasn't the case, as a blanket statement. And so it's very much more about, this, account manager can actually get you started, or this specific lawyer, understands the intricacies of setting up an offshore structure. So I think that's also very important, as you're, the same obviously with VCs, right? You can say, okay, this is, maybe a great VC investor, but the specific partner who's going to be on your board is the one who's going to make the difference. And so I think those are, it's a great point to definitely, talk to other people who have gone down the path and can give you those kind of specific recommendations. And then I think, there's a piece of financial flows, which, we're really going after with Kamino first, to try to help the companies, be able to receive their funding and then deploy the funding in a very seamless way, and not have to spend, time on that and trying to figure that out, and having, services disrupted because the flows aren't going. But there's also a very important piece around the information, right? And making sure that it's reconciled correctly, it's organized, it's something which you have available for example, a next round, so that you don't get in trouble when you go to do a due diligence. And I remember back in the early days of Gilbo, so Thiago and I would alternate. One of us would one month have to do the bank reconciliation in Excel, then the other one would. And it was a huge, hassle, and it just kind of we felt like a total waste of time. Tools have obviously developed over time and everything else, but love to hear from Arthur, as you're, setting up Bamboo and like the first, months and everything else. How did you think about setting up kind of the processes and making sure that you also have the information, kind of correctly accounted for, besides just the pure financial flows?
Yeah, actually, I mean, your story, first of all, it reminds me that the benefit of having good tools is that later on, you wind up needing to focus your attention as a CFO very much on strategic planning and on developing KPIs and working with the sales team. And that only happens if your controls are well functioning. And ideally, that's not where you're spending a lot of time as you get a little bit more mature. Today, I think it's natural to start in Excel, but as quickly as possible, you want to have very good tools to be able to automate and focus more on strategic priorities. Yeah, that's really it.
Cool. Yeah, and I think there's this kind of initial setup piece that most founders go through. If we're talking kind of a traditional case where they're not raising money already, with a PowerPoint, they've probably set up some type of operation. They're starting to test out their idea and maybe bootstrapping to begin with, and then kind of the next step is, okay, I'm going to go out and do a fundraise, and especially I think for companies that have already been operating for a little while and want to be able to have a good story for their fundraise, and to be able to at some point the VC is going to want to see some type of financial projections. They're going to want to see a budget. Then once the investment's received, they're going to want to do this kind of some type of control about budget versus actuals. What are some things you've seen there, Arthur? And I know you having done all these M&As, I'm sure that you saw some best practices and some worst practices in terms of also how do you kind of communicate your business to the market, and then make sure that you have the controls in place so that the market also sees you as a reliable, your projections are reliable, your numbers are reliable. Even just more from somebody sitting in kind of the manager chair, what should they make sure that they have in mind?
Yeah, I think it's best to kind of start what is the gold standard, and then what do you have to do to work back. The gold standard is to have a rolling forecast where every month you're updating for the next year where you think things are going, and then you're doing variance analysis on why, what went right, what went wrong, and adjusting that. To do that, you need to have, it sounds trivial, but you need to have like a really good idea of how your business works and what are the drivers. And I guess one of the things I saw in M&As is how oftentimes that's not the case, that people don't really understand what are the levers that I pull, or to talk more directly, like if I put in money here and resources here, what can I expect out over here, in terms of revenues. I think another place you want to get to that I've seen very few startups actually do well in the past, and maybe things have evolved, is to be able to project balance sheets, which also necessitates basically that you can do cash flow forecasting. So, as a CFO, then you have to ask, like, what can I do how close can I get to the next month? And then once I refine that to the next 3 months, and it's just a constant process. That control comes out when you talk to investors, because you have incredible confidence on where your business is going, how you're going to use the money that you raise, and why you think that this is a good investment. Surprisingly, I guess maybe with the kind of the go-go years of the last year in particular, people were really just focused on growth at all costs. And it wasn't really important on if I thought there was going to be 50% growth and there was 30%, or if I thought there was going to be 30% and there was 50%. People just kind of looked at the results. I think those days are gone. And so, it's incredibly important that you have an idea of how your business, a very, very good idea, strong idea, how your business works. And then in your dialogue with investors, they'll give you feedback on how's that received. And then because you know your business so well, if for some reason they find that underwhelming, you can go and tweak it and then come back and have kind of a recursive dialogue there to get funding.
Yeah, and I think that's a super important point as well, because I think what I've seen is typically you start doing all cash-based, actuals and budgeting, because you're just looking at literally bank reconciliations, and so you're saying, okay, if we paid the boleto the last day of the month, that's when the cash goes out, and that's what ends up showing up early days of kind of the financial statements. And then as startups, become a little bit more sophisticated on the finance and the accounting side, they usually move over to more of an accruals-based accounting method, and then they'll start to look at things from basically what would be a P&L perspective, right? And then as you're growing very quickly, you often in these go-go years, as Artur mentioned, many startups lose sight then of cash flow. So I think all of this stuff needs to be really tied together, and just one example of how I think sometimes the payment methods are so inefficient compared to what you're trying to do from a business perspective. I know in the early days of Giabolso, we didn't have credit with we didn't have a credit card limit that was sufficient, or credit with any of the online marketing channels, and so we would actually have to say, okay, the beginning or the end of the previous month, how much we plan that we think we're going to want to spend on Google, how much we're going to spend on Facebook, basically make the decision and then pay 2 boletos and have the credit there. And if you thought you wanted to spend 50,000 with each one, you suddenly have 50,000 rates of credit with each one, and perhaps your Google campaign takes off over the course of the month. It's you've used all your credits halfway through the month and you haven't used the Facebook credits. And then there's this question of, okay, are we going to put more into Google? What do we do with the credit that we don't have from Facebook? And then when at the end of the month, you look, how many users do we bring in? You're saying, okay, the cash went out at the end of the last month, and then the users all came in this month. So all of that kind of stuff actually takes a ton of time away from management making the right decisions. And so that's one of the things as we think about what we're offering with Kamino is having a credit card with sufficient limits so you can actually just consume within the boundaries of what you've established for your online marketing campaigns, and you're not having to prepay boletos, right? So it's just automatically being charged against your credit card account. And so these type of things also help to tie better the cash outflow to the actual investment which is made in online marketing, for example. So I think those are kind of cases where the cash flow ties back to the information in a more true way. And I know.
Sure.
Oh, go ahead. Yeah, please.
No, I was just saying, accounts receivable and payable management, which you guys help with, is absolutely critical. And then many startups nowadays put into their business model that they're going to offer financial services, and that actually puts an asset on the balance sheet where they've lent money, and that's where a company like Bamboo comes and helps out in getting those and structuring them into a vehicle to sell them back to investors to get the cash back. But I think it's easy to say I'm going to offer a loan to my client base, and it is certainly credible to imagine that you can do that well because of the data you have. But I think sometimes startups fail to realize how quickly that can eat through your balance sheet, in the sense of it ties up tons of cash. And you know, companies like Bamboo help and plan for that, and get those off your balance sheet so that you can also free up cash and invest more in development and product.
That's great. And I think, you know, you said a little bit about, you know, the asset management. How do you think about that, kind of in a, you know, I guess more of a conceptual way? And then we can talk about how you actually execute on it. But from, you know, if you get money offshore, so you're, you know, you've done around in dollars, your money's all sitting up in dollars, but you're running your operation in reais, right? So how do you think about, you know, managing your dollars versus your reais, and, you know, versus your cash burn?
Sure. I mean, I'm a bit conservative, having come from Process, which was the controlling shareholder of Marvel, and they have extensive experience in operating in multiple jurisdictions. I generally would hedge 2 years of expenses, or at least a decent part of that, by bringing the money on shore. So I try not to run a big mismatch for known expenses. But then on the other side, you know, you shouldn't, in my strong opinion, the Treasury shouldn't try to become a profit center and trade currencies, in the sense of, let me bring more than I need. Because, you know, invariably, anytime there's a crisis, the dollar rallies, and you're just very happy to have cash there. The other thing is on the fundraising side, and it's very hard early on, especially in today's market, but you do want to raise ideally an extra year at least of, you know, what you think you're going to need in terms of runway. Alternatively, to the extent that you can see when the cash will end, you know, as a risk management strategy, you really want to be raising around a year before that. And I know those are incredibly difficult demands early on when you're eager to get going. But sometimes it's, you know, in my opinion, it's best to spend a little bit of time raising a slightly larger round, and getting people who can really support you, than to kind of rush underfunded to market there.
For sure. And I would say, even, you know, most startups, if they're getting money from, you know, international VCs, and they have, for example, a 2-year runway, most of the time, you know, what we see is startups only bring down, you know, 6 months of USD at a time down to Brazil. And I think, you know, that's really 2 reasons. One is, you know, just being a little bit more conservative in terms of, you know, you only have 2 years of total cash in theory, and so you're kind of rolling it that way. But the other thing is, you know, the investors usually will have, you know, you might have a liquidation preference stack in dollars. The investors, you know, are usually dollar-based investors, and so having, you know, if there is a shock to the currency, you know, having most of it in dollars, I think, is easier for the investors to understand as well. But, you know, on the other hand, what we, you know, try to, and I would say, dissuade founders from doing, and you know, a great, you know, kind of question that my co-founder asked me, Gib, also was, you know, how happy would the investors be if we gained 10% from, you know, an interest rate movement? And I said, oh, you know, they'd be pretty happy. And I said, how pissed would they be if you lost 10% because you were trying to, you know, optimize? And, you know, they'd be furious, because that's not our business, right? They can do it for themselves. So I think the you know, to your point of, you know, you shouldn't be trying to do, you know, currency arbitrage. You shouldn't be trying to do interest rate arbitrage. You know, think about what are the cash flow needs for your business, and bring it down, and, you know, make sure that you have kind of the best kind of, you know, the best rails to bring it down, and you do everything correctly. And that's, you know, I guess I'd say we're,
yeah,
Kamino,
certainly a rolling basis is okay,
well,
but I wouldn't wait month to month. You know, like if you in whatever it is, just roll with it. So if it's 6-month windows, you know, every month, kind of look at where you're going to need 6 months from now, and bring that in. And certainly services like your currency service helps with making that easier, and not traumatic on, oh my God, now I have to do tons of paperwork to bring in money.
And there's, you know, obviously the economic side of any FX, you know, so trying to get a good spread on the interest rate. Back in the day, I found a guy who actually got, you know, pretty good rates for me, but he was like an old school trader. And then I figured out that, you know, you had to do this like registro no Bacen. And we found that out the hard way as like we hadn't done it. And it's like, oh shit, why didn't anyone mention this? And so, I think that's the other part that's really key, which, I think is not obvious, right? If you're like first time founder, you haven't worked in finance before, there's, often, a lot of bureaucracy, which goes beyond just the economic terms that you're able to get. And so that's also a really key piece. And goes to your point of talking to people who have gone down the path, who have done this before, and making sure that kind of you've fully completed the process, because it's easy to let it go, and then it's very hard to chase your tail and get that back. And I'm sure you've found that in M&As as well, due diligence is where red flags come up because people didn't handle things the right way and that type of thing.
It goes back to how we opened up and having very good partners. And I admire what you're doing in that having a group that understands technology and understands startups and is in it for the long haul. So not interested in just this transaction that I'm going to make some small amount of money, is really critical in terms of the groups like Kamino or Bamboo. We give really solid advice. I mean, first of all, we really hope that your business goes well and want good things for you, and you get that when you use, again, partners who have worked in technology, who understand the pains of a startup, and consider that. I think oftentimes that's underappreciated when one is starting up a business. It's been pointed out in his story. It's you look for the what seems like the best deal, but oftentimes it's not an arbitrage of price. It's actually some really important services that you need were cut out, and that's how the price that you see or perceive was able to be achieved.
For sure. And there's actually a question here in the chat, which we'll tie into. Maybe we'll shift and start talking a little bit more about for scale ups and larger organizations, as you go from kind of the founder maybe being the head of finance to actually building a finance organization and tools. So Vitor is wondering if you could cite some of the tools that you think about to automate financial control and free up time to do more strategic tasks. And this could be now in the context of even a little bit larger kind of startups, once you actually have the scale to start building teams and hiring tools.
Yeah, in our case, we have data scientists on board, and we put in APIs and try to do everything digitally native. Basically, I mean, in finance, it's always scary to go to an ERP, but as soon as possible, I strongly encourage getting something that forces controls and produces a database of transactions. And Lovely, we were quite industrialized, and we worked in a publicly traded company, so we had various systems, and Microsoft Dynamics, and I think eventually implemented SAP. Or obviously, early on, you're not going to do this, but it's important as quickly as possible to get something. Can be a simple Oracle service or some of the other startup-oriented ERPs, but formalize your processes and get out of Excel as soon as possible. I work on the debt capital market side. We actually go and work with the companies and extract out the information of what is on their loans or their balance sheet, and put those into a database to package them up to be able to show that in an automated way to investors, for example.
Yeah, I remember back in the day, they say, send us your loan tape, and I'm Googling what's a loan tape. This is all in Excel. So,
yeah, exactly. I mean, and that we digitalize the loan tape and put it in graphic form and show people. And so, what I can say is more than what do I use? We're investment banks, so it's a little bit different. But we help the CFO automate that kind of task. Again, because what's really hard to automate is what goals are you going to have? What strategy are you going to have? That process is incredibly important, and it starts with strategy development, and then has something called strategic planning. And strategic planning, despite the name, isn't where strategy happens. That's where you take the strategy that you've decided on, and you break it into goals, into metas, and then there's a number of very interesting products out there that you can use. I'm not going to recommend one here, but you can reach out and I can put you through on how do you manage that process, which in Portuguese we call the modelo de gestão. But for me, that, what I was hinting at when I said that is, it's really important that the CFO, as soon as possible, get involved in strategy development, and goals and KPIs, and as much as possible outside of control, the controladoria of the company. And you do that with, ideally tools like what Kamino offers and other services.
Yeah, and I think, that's one where I would definitely encourage founders. One, we've been saying Excel, but in practice, I would say nowadays definitely, building everything in like a Google Sheets is actually better in terms of the collaboration and you can do linking and have real-time updates. And then really, I think the challenge is typically when you get your accounting finally working, it's a pain, it's bureaucratic, it's often slow to kind of get the books closed every month and everything else. And as your business evolves, and as maybe you add, a new product or a new business line, or you do a pivot, many times you don't go back and kind of update all of your accounting. And so what we, often see is that you end up having kind of your management dashboard, which is built, based on the new business or the new things that you're looking at. Then your accounting no longer necessarily matches that. And so then you're having to build kind of this bridge every month to, so quickly with the management results that you can show to the management team and make decisions and adjust actually your strategy, but at that same time, close the books. And I think, many startups end up not having the discipline to always make sure that there is a linkage between what you're doing from a management perspective and still what your accounting is showing. And that is, although it can be painful, it is a really important piece, and it's a lot easier to do it month to month and then to try to go back and reconcile an entire year. So I think it is important to have that discipline and not, the finance department as two completely separate, teams, with one doing FP&A and strategic stuff, the other one's doing controladoria and accounting, and then, not ensuring that linkage is a true picture of reality, because it's easy to get in trouble when you end up having two completely separate visions of how the business is being run.
Yeah, for sure. No, just thinking about that, it's, for example, FP&A needs to be able to go and find out like what happened and what's driving the numbers. And it's a disaster when they go and talk to the business, and the business says, the business unit, and says, I have no idea what that number came from. That's not the reality of it. So you need to be an integrated team, and working close together so that everyone agrees on the numbers that they're receiving. I know that sounds like almost absurd, but I've seen this a lot happen where you can't even agree on the accounting and how that translates into how the business is doing. So you lose a lot of time going back and forth, particularly like when revenue's to be received, or there's account to be paid.
Yeah, and there I would say, although it can be painful, the closer you can be to your accountants, and then in the future to your auditors, the same goes, the closer you are to your investors in terms of communicating, how you think about the business, how you're, accounting for the business, what the controls are, and, what certain actions are leading to in terms of outputs for those different stakeholders. And it is actually important. It's a lot harder to, go find an auditor, 5 years in and have go back and question every single thing that you've done, versus having, kind of somebody that you can ask questions to over time and make sure that you're aligned with, and makes it slightly less painful to kind of do the, annual audits and that type of thing. So I think all of those, are relevant, and you have to kind of choose someone, whether it's one of the founding team or, one of the first hires on the finance side, make sure that you're doing that, kind of more procedural and the must have stuff, as well as Arthur said, really being a business partner, right? I think, we both would agree that the finance department shouldn't have like only a controller's hat on. You're taking a lot of value away from the business if you're not actively involved and helping to identify, the drivers and what different types of investments are yielding for the core business. I think we got another question coming in here. So it says if a startup decides to move back to pre-operation stage, what are the tips you give to raise on a presentation? So here, I assume it means that if you're raising, so pre-operational, right? So if you're basically raising on a PowerPoint, we could probably both talk to that.
Yeah, I mean, I think we actually both did that, didn't we? First of all, I like this concept of moving back. This I think is worth a little exploring. I'm not. Sometimes it's better to just start cleanly. If you have something that is already operating, but didn't turn out to be a business, maybe leave that. Investors generally like clean vehicles or clean stories. So it's really hard, to talk about moving back. But in terms of raising on a PowerPoint, you're investing in the team. So the question is like, is this a team that can credibly execute? Have they raised money before? To the extent that you can control those factors on who you choose as co-founders, that helps as well. Like, are they well connected and do they have an extensive network? I would just commented to Ben before we started. I was listening to his, he most recently did a podcast episode, and they raised in 2 weeks, which I'm just like in shock, but took a little bit longer for us. But you can do that, I think, if you started a business before and have experience. And in his case, he had an exit as well. And so, look, it's a continuum. If you have people who have started a business before, who have raised money and have had some returns, and who have worked with venture capitalists, they're going to be able to put together the resources. If everyone's really new, you might want to join a team, rather than trying to start out on a PowerPoint. On my thoughts, Ben.
Yeah, I would agree. I think the only other two aspects that I look for is obviously the size of the market and really the credible markets. You can't say like, okay, the entire retail market. You need to choose what you're actually going after, and then show that you understand the size of that and the competitive structure of that market. And I think the other, Arthur mentioned, do the founders have the right complementary skills to solve the problem that they're going after? I would say the other, besides skill, is will. So how passionate are the founders about trying to solve the problem? Is this something that they've suffered through before, or what's kind of their motivating factor? So just at least personally, if it's someone coming to pitch me the fifth electric scooter startup in Sao Paulo, that's less exciting to me. If it seems like it's just opportunistic because it's a boom, versus somebody that has like literally been really upset by something because it just didn't work, and now they're going to go out and solve it. I think they'll tend to be much better ambassadors to solving that problem. But I think those are all really, really important elements, and making sure that comes through. I would say that the other thing is on the presentation itself, don't try to recreate the wheel. Stick to the kind of standard format. That's what the VCs are used to. It's kind of recognition on that first, skim through the deck and make sure that really, all those elements that we discussed here come out extremely clearly, and leave, some of the details for a second conversation.
Yeah, and I'm reminded as you talk about stamina and for you mentioned in other venues grit, and grit is important. I think that also comes out in a way of storytelling is very important. So your grit comes out in telling stories, and I think on our side, I had participated in the construction of iFood over the last 8 years. We did like 20 mergers and acquisitions just in the food delivery space. We took the company from 25,000 orders a month to 60 million orders a month. So tremendous growth, and I was able to tell that story to people and get them over the hump. Also, was a large market, and I think Ben can maybe tell his story that he does so eloquently. But also the hard, it's important to talk about the hard things that you've gone through and where you've failed and what have you learned, or where you've had challenges as well.
Yeah, and I would say from the kind of finance theme here as well. One thing is, if you, for example, our founder is really good at telling the story and pitching the vision to VCs, and kind of this very high level, kind of where you want to go and everything else. and you prefer to be looking forward and kind of creating the future as opposed to looking back. It's very important to identify that and to bring in somebody in the finance department on the finance side who is going to do this kind of controlling task. And they're actually I went through the same thing on the debt side, so raising debt capital. They don't want to to hear the dream and everything else. They're like, okay, what can go wrong? How is it? What should I be afraid of? What are the risks? It's a very different mindset. So I also think in terms of like building your finance team as a startup, the pitch that you do to the VCs, you probably have to adjust it a little bit for like the controller who's going to be perhaps more risk averse. So how do you also think about like adapting your pitch depending on your audience? Because I think it changes a lot. And it's hard as a founder, right? You have to like have multiple hats and multiple pitches for each situation.
Totally agree.
People can go ahead and send questions. Questions in Portuguese are fine as well. So we'll let you continue to send those over. The other thing in the meantime that I think would be interesting for us to touch on a little bit is, how do you think about kind of keeping your investors in the loop and you're building kind of a management reporting and processes internally that then are easy to kind of share with the investors, or create kind of your investor dashboard? And do you usually prefer to have someone dedicated only to that, or is it the FP&A person that does both? Or how do you think about as you're kind of setting up the first 3 or 4 hires of a finance team, kind of organizing across the functions, both for the internal demands as well as the external reporting?
As CFO, I that is a process like I personally own. It doesn't mean I prepared it from zero, but I wrote all the commentary and definitely really owned like what went out. And I think the idea I had was how am I proud of this as an investment? Like, where's this going? And let me tell that story. And yeah, so I mean, when we had the earlier question on freeing up time of the CFO, this is definitely one of those areas on reporting, which is very hard to automate. You can automate the graph production, but the commentary and communicating that to investors is very difficult to automate. And so that's where I would spend my time.
Definitely. And I think the other thing are just, kind of knowing the basic numbers and having, kind of ways that you can cross-check things pretty quickly. Very commonly caught errors in our investor reporting just because, a graph hadn't updated or that sort of thing. And so, having kind of that critical detail-oriented eye as you're thinking about also the story is, something which is important to have kind of in that CFO chair to be the last filter before things go out. Ito has a question that says, what's the key advice you could provide for anyone who's starting a business without investor funds from a finance perspective? So here I understand, if it's initially a non-venture backed business, perhaps wants to raise funds in the future, how do you think about kind of getting that basic finance operation set up initially?
Wow, I guess I can give some thoughts on that. I mean, there's a radical thought of like, hey, I think it's really important to have investors. So like it forces you to answer questions. It's a good governance demand. You have to convince people to give you money. It helps really shape your perception of the market and of customers. If you're going to go alone, that's bootstrapping. Many companies do, but then you're going to keep costs extremely low. I just would say try to do few things as possible. Ideally, get one product out, and then you can creep kind of left or right and add on more, so that the one thing you do well enough that you have margins to hire very good people. Trying to do a lot kind of on very low margins, meaning like you add a little bit of value only, it's going to generally cause you to underinvest in team as well, and kind of creates a bad cycle or a challenging cycle to get to a business that is then venture fundable.
The one caveat I might give to that is, I think especially for people that don't have maybe previous kind of, they haven't founded companies before, they don't have an exit, they need to show some traction, and also I think it's hard to raise money and then you start to test something for the first time and you figure out it doesn't work, you have to pivot, and then you have the investors getting stressed out because you're pivoting early on. If you have something which you have a hypothesis about, but you're not completely certain that is going to be the initial direction, I think it actually is good to spend some time and at least first 4 or 5, 6 months, if you can, bootstrap just to start testing. But I think 2 things to make sure that you're ready when you are going to go out and try to raise funds. So looking forward, what's the story that you want to tell to the VCs when you are going to go out and start raising money, and make sure you know what those metrics are that you're going to be really wanting to talk about and to use as proof that it's a venture backable business, and then make sure that you're actually building your strategy to make those metrics happen, and you're tracking that. And the other is just the basics on make sure you're doing bank account reconciliations every month, and you're not mixing too much of your personal from your business cash flow, so that you do have a pretty clean, simple structure for VC investors to understand going forward. And the other, just kind of super small point, but one which we see people get in trouble with, is don't start, for example, giving stock options to employees when you're a bootstrap company, and then want to flip up, to like a Cayman, Delaware structure with VCs and have a new option pool. That's a complete nightmare. So, the less that you can do from a stock option and kind of corporate structuring perspective before you set up the definitive structure for the VCs that you need,
Sure.
the better. So if it's just a couple of founders and it's a clean local structure, that's fine.
And that reminds me, I mean, you can definitely start as a limitada and then use services like Kamino to flip up. This is extremely common, but as Ben mentions, don't start issuing options or complicate your cap table in that Brazilian entity. Just keep things very simple, kind of get the proof of market that you need, and then put the company on track to be invested by venture capital, which Kamino can help with.
Good. Probably have time for one last question if anyone wants to jump in. But I guess, Arthur, just if you have any kind of last thoughts from your side, having been through this on many different sides of the, what are kind of maybe a couple takeaways that you'd give kind of founders that are going to be the ones maybe more concerned about the finance function? Usually it's one of the founders who draws the short straw and ends up having to kind of build that over time and be kind of the one who's closest to that function. I would say more optimistic things. I was a CFO for a long time. I think it's an incredible role to learn things, because you're the person in the company that sees everything that goes on. I think it's important just to recognize the job for what it is, which is one where you're going to feel like you're doing everything in many ways behind the scenes. So you're running legal, you're opening bank accounts, you're checking accounting, you're making sure that the bills get paid, you're dealing with onboarding people, and every day is really dynamic. And I think you have to look at that as an amazing part of the role instead of an overwhelming one, which some days it will feel like. So I would leave it there. And congrats to anyone who has this role. I think it's amazing, and you'll learn a ton. For sure. And I was joking actually a little bit, with my comment as well. But interestingly, when I was running Groupon down here, I was on the business side as well as the CFO for LATAM. And I actually, many times felt like I understood the company better than even the founders up in the US, because they were so far away from the cash flows and from the unit economics and these kind of very key strategic finance metrics. And so seeing both sides and having a ton of commercial pressure and a ton of pressure to IPO, and on the finance side, I think that's actually an amazingly dynamic position to be in, and you can have be an incredibly, I think, influential figure within a startup if you really understand the business and the financial drivers and the cash flows. So I think it's a unique position as well that you can sit in. And certainly for us, over all these years, we always think about that. With Kamino, the first thing we did was say, okay, who's going to be really close to the finance function and see that as something which directly is helping the business and not just an after the fact. So I think it's also a mindset issue, and putting great people to run those functions means that you're going to get a lot more output out of those functions, and they're going to end up being like the meio campo and the atacantes and not just the zagueiro, right? So definitely that's super important.
Certainly.
I think we'll wrap it here. I'm not sure that we got one more question, but I'm not sure if I totally got it. So maybe we'll wrap here. I don't know if Gustavo is going to jump back on, but feel free to jump in if you do want to come in, and we'll start to wrap up here.
Really nice chat.
Valeu. Se quiser também, a gente muda para português aqui.
Obrigado, Gustavo, for hosting us tonight. Thank you.
Não, excelente. Eu acho que no momento que a gente está vivendo, né, em que venture capital está bem mais difícil, né, de captar, muitos founders estão tendo que pivotar os seus negócios de um negócio que crescia, né, rapidamente, um growth mode para um survival mode, né, e super importante para você conseguir fazer o seu caixa durar mais, né? Você precisa saber aonde cortar, aonde mexer, e você só consegue fazer isso tendo realmente controles financeiros. Bom, e a gente estava aqui com dois pros, né? Dois founders, CFOs que criaram startups, né? Desde o early stage aí, acompanharam até o late stage, viram essas empresas crescer bastante, então acho que foram dicas bem valiosas aí para os empreendedores. Queria terminar, né, agradecendo o Ben, agradecendo o Arthur pela participação, pela discussão, e também dizer, se você é um empreendedor, né, que esteve aqui com a gente, mas conhece um amigo, né, um outro empreendedor, uma outra startup que precisa desses conselhos para fazer uma melhor gestão financeira, esse vídeo também vai ficar gravado aqui no YouTube da Kamino, então encaminha para eles, né, são dicas aqui super valiosas. Legal, gente? Vamos encerrar por aqui e a gente se vê aí na próxima live. Um grande abraço, boa noite a todos.